Canada's historical energy partnership with the United States has served as a foundation for economic stability, ensuring low costs and a consistent energy supply. However, recent changes in political dynamics now jeopardize this long-standing relationship. The introduction of aggressive tariffs on Canadian imports ignited a trade war, compelling Canada to explore new energy markets beyond the US. This strategic pivot aims to safeguard its economic interests. As global energy demand escalates, advancements in technology and new trade routes enable Canada to diversify its export markets away from the US. This diversification is essential for securing Canada's energy future. In enhancing its trade relations, Canada is increasingly focusing on liquefied natural gas exports to Asia, providing competitive alternatives to American energy sources. This shift is vital for broadening its energy market. The European market has grown increasingly dependent on Canadian energy after severing ties with Russian gas, prompting Canada to establish long-term energy trade agreements. This move effectively addresses Europe's energy gap. As the United States grapples with significant economic challenges stemming from diminished access to Canadian energy, rising gas prices threaten to disrupt the power grid. This situation heavily impacts American consumers and industries reliant on affordable energy. Experts argue that lifting tariffs and mending relations with Canada could alleviate rising energy costs. Nevertheless, implementing such changes may take considerable time. In the event that the US turns to more volatile oil suppliers like Venezuela and nations in the Middle East, consumer price instability could increase significantly. The cessation of Canadian electricity exports could trigger severe shortages and soaring power bills, particularly affecting regions like Michigan and California. American industries, including automotive, steel, and food processing, face the adverse effects of escalating energy costs, potentially leading to layoffs and factory closures. This scenario creates a ripple effect through the economy. Small businesses, such as local manufacturers and delivery services, struggle under rising energy costs, leading to increased consumer prices and the risk of layoffs. This intensifies the financial strain on families. The energy crisis contributes to further inflation due to heightened transportation, manufacturing, and shipping costs, impacting everything from groceries to travel expenses, resulting in consistently rising prices for consumers. Canada's expansion includes substantial investments in liquefied natural gas projects, projected to double its export capacity in the next 5 years, thereby addressing the surging global energy demands. Successfully diversifying energy buyers beyond the United States fortifies Canada's economic stability and reduces dependence on a single trading partner, ultimately enhancing its position in the global energy market. The nation is heavily investing in renewable energy sources such as hydroelectric, wind, and nuclear power, aspiring to take the lead in clean energy exports. This transition aligns with global climate objectives and rising demand. Rebuilding energy trade relations with Canada could stabilize supply chains by lifting restrictions on oil and gas. However, political divisions pose challenges for the US government. Increasing domestic energy production is another possible solution, despite the presence of significant untapped reserves. However, ramping up production will require time due to environmental regulations and ongoing debates. Seeking new energy partners may offer alternative sources, though this approach carries inherent risks. Countries like Venezuela and Mexico may provide oil, yet they lack the stability that Canada offers. The initial shift from Russian gas to North American LNG appeared promising, yet the high costs of imported energy are now straining European economies, resulting in increased electricity prices and industrial slowdowns. Canada's potential shift towards Asian energy markets risks exacerbating Europe's energy crisis, forcing them to rely more on expensive US imports, which could introduce further instability into energy supply chains. The United States faces critical choices regarding its energy future, whether to repair relations with Canada or to enhance domestic production. Each option presents unique challenges and implications for long-term energy security.